This is Wallet Brief, where we cut through the noise and focus on what matters to your money. Stock market today, searches spike as Monday trading begins with futures showing modest gains ahead of the opening bell. The S&P 500 closed Friday at 6,909.51, just 91 points below the psychologically significant 7,000 level, after rallying 0.69 on the Supreme Court's tariff ruling. The Nasdaq finished at 22,886.07, up 0.9, while the Dow gained 0.47 to 49,625.97. But Monday's cautious tone reflects the real story. Investors are positioning portfolios for Wednesday's Nvidia earnings report, and nobody wants to make big moves until that critical data arrives. Nvidia has become the single most important earnings catalyst because it's now the world's largest company by market capitalization and represents significant weight in major indexes. Wall Street expects explosive growth. Analysts are looking for 57% revenue expansion for fiscal year 2026, with projections climbing to 65% for fiscal 2027. CEO Jensen Huang has publicly stated that demand for the company's new Blackwell AI platform is off the charts, creating enormous expectations. But here's the pressure. After weeks of AI spending skepticism that crushed software stocks and sparked broad defensive rotation, Nvidia must deliver a massive beat and provide confident guidance to restore faith in tech leadership. The company's results will determine whether the recent rally to record highs continues or reverses sharply. Here's what's actually happening beneath the surface. The market is caught between conflicting signals. Friday's Supreme Court ruling that struck down President Trump's emergency tariffs provided relief, but Trump immediately announced plans for new 10 global tariffs through alternative legal channels, meaning trade uncertainty persists. Last week's GDP miss at 1.4 versus the 2.5 estimate showed the economy cooling faster than expected, partly from the government shutdown. Core inflation remains sticky around 3, keeping the Federal Reserve cautious about rate cuts. Now the market faces maximum concentration risk. Just 10 companies represent nearly 40 of the S&P 500's total weight, with Nvidia as the largest. Wednesday's earnings could move the entire index significantly in either direction, regardless of what's happening in the broader economy. If your 401k or retirement accounts are heavily weighted toward tech stocks and semiconductors, this week matters enormously for your portfolio value. Nvidia needs to prove that massive AI infrastructure spending by Microsoft, Amazon, Meta, and other tech giants is translating into sustained chip demand. A big beat with strong guidance could send your tech holdings surging and pull the market to new records. A miss or cautious outlook could trigger sharp declines not just in chips, but across software, cloud computing, and growth stocks generally. For consumers, the tariff situation remains unresolved. If Trump's new 10 global levy gets implemented, prices on imported goods will rise despite Friday's court victory. The weak GDP data increases odds of Federal Reserve rate cuts later this year, which would eventually lower mortgage rates and borrowing costs, providing relief for homeowners and car buyers. Monday trading will likely stay range-bound as investors wait for more data. Watch for any White House announcements about implementing new tariffs. Executive orders could come quickly and shift sentiment immediately. Consumer confidence data releases Tuesday morning, which will reveal whether households are feeling the economic weakness shown in last week's GDP report. Then Wednesday after the close, Nvidia reports. The stock must deliver exceptional growth numbers and confident language about future AI demand to justify its valuation. Watch how other semiconductor names like AMD, Broadcom, and Marvell react. They'll all move sharply on Nvidia's results. The next 48 hours determine whether this market pushes to 7,000 or pulls back into correction territory. Everything hinges on Wednesday. That's it for today's Wallet Brief. Subscribe for daily updates on what's moving markets and your money.